over here, and today we'll be taking a look at a little bit of what some of the fundamentals that I'll be looking at for next week's trading. Now we are entering into the last month of the year, the last trading month of the year. So a couple of things that I would like to kind of show you guys is probably normally towards the end of the year, there is a little bit of a dip in terms of trading volume as probably traders close off their portfolios and, probably like close off the P&L for the end of the year. So one way to kind of take a look at it is to just take a quick peek at the seasonals. Let's start with here at this point. So I have a couple of seasonal data over here. Let me just load the data. Okay, so on the seasonal data I have, when we look at some of the Forex pairs, I want to kind of show you the Forex pairs, the US pairs. Okay, give me a moment to load it up. Okay, it's a bit laggy. I think this website's a bit laggy at this point. But if you look at the seasonals kind of tell you a little bit of a similar story where towards, somewhere around the first couple of weeks of December, a lot of the Forex currency pairs starts to flatline. Okay, so while this is loading, let me jump on to something else first while I try to kind of load this a little bit better. A couple of things that's interesting in the news front, I think about a couple of days back, or just yesterday, 13 hours ago over here, this is what came up from Financial Times. So Trump actually threatened the BRICS nation with 100% tariff. So it's kind of like a big, I'm not sure it's like if it's going to really happen, or is he just, tweeting or, like just posting his kind of like big, I would say big news in the sense, I wouldn't say it's big news. It's more like, latest threats and things that he said or he threatens that might or might not happen, because he can say one thing, but don't forget the federal government behind, the people who are actually, helping him to make the decisions, they might not allow him to do decisions that are very extreme. So he likes to make very exaggerated statements. But what does that mean for the US dollar if he is threatening the BRICS nation with high tariffs? So it might not be 100%, but it might be, 20, 30, 40%, like what he's doing to China. It might be moderated because the federal bank, behind the scenes know that, this is not quite possible to actually ban, 100% tariffs is almost like telling, the people of the US don't trade from any of these BRICS nations. So it's kind of very extreme. So I find that it will probably come back to somewhere in the medium. But what it will do for the US dollar is it will allow the US dollar to hold a little bit more ground. All right. Now, as my seasonal data is still loading, okay, finally loading over here. Okay, a couple of things that might be a little bit more obvious. If we look at, let's see, if we look at the US dollar, okay, it's still loading. So let me just give it a couple of minutes for it to just, finish refreshing its data. And we'll come back there in a little bit. Let's just jump a bit to US dollar 10-year yields now. If you are trading the dollar yen, then the correlation to the 10-year yield is something that you must be aware of. So the US dollar yen is slightly correlated together with the US 10-year yields. The 10-year yields kind of lead the market. So if we kind of want to look at, probably let me just do this to kind of show you what it means. This is the, let's go with dollar yen on top. I'm just going to put the dollar yen on top over here, and the 10-year yields down below. You can actually see, if you look at the shape, the general shape, you notice I kind of lined up the months already. So if you look at the general shape of the chart, you can see it's very, very closely correlated. Usually it's the 10-year yields that kind of lead the moves on the dollar yen. So if you are trading the dollar yen, then the dollar 10-year yields is a chart that you also have to be kind of aware of to kind of see where interest rates are kind of moving. All right, let me go back to the general charts. Okay, so 10-year yields here, daily time frame, it's kind of broken below the 4.3%. If the yields waver down and pulls down towards the 3.94%, then I think in the short term the US dollar might weaken. But overall, if we kind of look at the stats coming up from the US itself, so the latest quarterly reading was a 2.8% GDP growth. It really is still the highest among all the other currency pairs, all the other economies we're looking at. So if you kind of look at the other economies where you can see, for example, Euro is 0.4, UK 0.1, Canada 0.3, Australia 0.2. And if we continue down if you continue down the line, we'll see that, let's see, where is Australia is somewhere, Switzerland and Australia. So Australia is here, Australia 0.2, Switzerland 0.4, and then I'm skipping the Singapore dollar. Singapore dollar 3.2 is pretty high, but Singapore dollar is a unique situation. And over here in the Kiwi, it's negative 0.2. So if we kind of look at the just commonly traded economies, right, the larger economies in that sense, every economy is below 1. Right, the quarterly growth, the quarterly GDP growth is below 1. So the quarterly GDP growth for US is actually almost triple, or at least 2.5 times. It's 2.8. Now this tells us that US has been facing very robust GDP growth. Interest rates is still among one of the highest, and inflation is pretty much controlled at 2.6. Now, if we click into inflation itself, you can actually see that inflation is kind of flattening out right here, a little bit of ups and downs, but inflation is kind of expected to pop up a little bit. And then kind of, according to what's coming up here, they are trying to control core inflation. So core inflation steady at 3.3% as expected, monthly core inflation holding at 0.3%, same as in September. So if inflation holds over here, then they might not reduce interest rates in the next interest rates reading. Now, if you want to see whether or not they are going to reduce interest rates in the next interest rate so-called news, then I will recommend cmegroup.com. This is what we call the CME Fed Watch. All right, CME Fed Watch. If you look down here, this is the sentiment for interest rates. So the next reading is coming up on 18 December. There is a 66% probability that interest rates are going to drop another 0.25 at least to between 4.25 to 4.5. So currently, where are interest rates right now? Currently, interest rates, if we go back here, interest rates are 4.75%. So if interest rates are 4.75%, according to the CME Fed Watch, there is a 3/4 expectation that interest rates are going to drop. All right, so this might be kind of like giving the downward pressure to the US dollar in this short term. So my question is, what if these people were wrong? So what if these 3/4 of the people were wrong, and in the end, because of where the market is, because of where Trump is right now, the Fed says, okay, we're not going to push down interest rate just yet. Maybe we do it in the next interest rate reading, which is in 29 January 2025. You can see it's a bit spread out, a little bit of hesitation over here. So also, if we add 57 plus 16, is almost, I would say, 75% over here. So there's a 75% probability of interest rates dropping only in January. All right. So while there is still a belief that interest rates will come off, the question now is when. So I suspect in the next interest rate reading for the US dollar, if the federal government does not drop interest rates, then I think there's going to be some strength coming into the US dollar. Right, but before going long on the US dollar, please, this is what I would like to show you guys. Look at the way the chart is moving in the seasonals. So this is a seasonal chart, data of the last 23 years, which is the blue line. You can see the first 2 weeks of December, very, very flat, range bound. It's very akin to coming into the holiday month, right? And then probably towards the end of the year, there is a very sharp dip for the US dollar. But what I would like to keep an eye on is when January starts and we open the year 2025, there is a decent probability that US dollar will start increasing again. So if I'm going to go long the US dollar, I would prefer to actually be a little bit patient and wait for January to aggressively go long on the US dollar. Anything to do in December now? December really is a volatile month. I think traders who will benefit in the month of December is usually the range traders. The range traders, maybe a little bit of the breakout traders, but trend trading, I think, is going to be like on pause for the short term, unless probably you're trading on a 5-minute, 15-minute time frame. Trend trading on a daily time frame might be a little bit difficult. If we kind of look at the other major currency pairs, you can also see the same thing happening on the seasonals, the holidays, where everything starts to flatten out. But for the pound, end of December all the way, it starts to pop up a little bit, and then look at how it's going in January again. All right, so the weighted average and the 46-year seasonals, tells you that pound might have a high chance of going short in 2025. But again, seasonals is just a guide. Please do note that past historical data does not mean that the future will happen. It is just used as a guide to kind of see what the seasonals are telling us to add to our probability of whether or not we want to take a trade in that particular direction. So what I'm trying to say is month of December, have some time trade carefully, manage your risk, and just be aware that markets are going to be a bit choppy. Euro over here, the interesting thing about Euro is it's got a seasonal bias towards the long side, but the charts are telling us, otherwise. So the question is whether or not this will kind of catch up. So if you look at let's say a normal Euro, let's look at the Euro dollar pair. Okay, Euro dollar pair. Okay, look at the very big bearish movement all the way to November, December, and it looks like just to be about picking up over here. So will the seasonals follow over here? Possibly, because one probable reason is you can see I've drawn this big rectangle over here. This is the price range. So if I go on a weekly time frame, you can kind of see this price range that the euro has been working at. So you can see all the gray boxes I have the historical price ranges that the euro dollar has been trading. And what I do like about this is the euro dollar is rejecting off what we call probably a demand zone from the bottom. So there is a good probability that if you add on a little bit of points from the seasonal, that is, towards the end of the year, we might get a bullish euro coupled with a bit of a technical level over here, where if the price can find a bit of support over here, then we possibly can see euro push to the upside. However, the way I trade fundamentals is strongest versus weakest. So euro dollar is not my favorite pair. What I'm looking at instead is the euro kiwi. All right, euro kiwi, because at this current I think the next couple of months, the kiwi, although it had a little bit of strength in the last couple of weeks, which is kind of strange because the New Zealand government actually dropped US dollar interest rates, right? So it actually dropped the New Zealand interest rates from, I think it dropped from 4.75 to 4.5%. So if we look at the New Zealand dollar over here, where is it? Over here, 4.25. So 4.75, they actually lowered its cash rate by 50 basis points to 4.25% during its November meeting. So you can see it's really pushing down. So if you talk about textbook economics, when you decrease interest rates for a currency pair, hypothetically, the currency pair is supposed to weaken. But what has happened in the last couple of weeks is the New Zealand currency actually found a bit of strength. I don't think the strength came in from a fundamental move. I just think it's a lot of profit taking. It's a lot of readjustment of portfolios. It's not so much the currency is strong. It's more of probably a technical level. There are other reasons why the currency is getting some strength in the short term. However, if I'm talking about fundamentals, I'm always looking for medium to long term. So this is the Euro Kiwi. Let me expand this daily time frame a little bit, or let's start with a weekly time frame first. So this is the weekly time frame for the Euro Kiwi. Let me just reset the charts to largen it a bit. So on the weekly time frame, if you look at the weekly candles, price is kind of trading at this upper, I would say, 1.800 is the upper resistance level over here, been rejecting a lot over here. Now, I am interested to purchase or to buy in when price revisits this level. All right, and I'm not. It's a bit of question mark whether this is a pullback move. I don't think it's so much as a retracement to the downside. I think this is more of a pullback. Prices has been going up for a while. It's going to pull back, and what I am interested is to position ourselves in the Euro Kiwi long positions when it comes up in the next couple of weeks. So Euro Kiwi long is something I'm looking at, but be a bit patient over here. At the moment, a lot of you can see an inside bar, outside bar, inside bar. Price is really consolidating the last 3 weeks itself. All right. So what I do want to see is I want to see price decisively push above. The good news is we already kind of have a higher low kind of forming on a daily time frame. So if this low is not broken and we get that higher low, this is the first level of resistance. If price is able to break this level of resistance, then I'm looking to take price at least to the next levels over here. So these are my two potential medium-term targets if the New Zealand remains as weak as it is statistically, and if the Euro seasonals follow. All right. Now, I don't think Euro is a strong currency. I think seasonally it does make a little bit of sense in terms of where it's at in the broader picture, of things. I think Euro is more of, I would say, it's not doing very bad, but neither is it doing very well. So if you look at the Euro statistics, right, we can see that 0.4, 3.4 interest rates, 2.3 inflation, jobless rate, don't worry, it being 6.3%, the Euro area generally has an above 6% unemployment rate for the longest time. So you can see August, September, unemployment has actually popped down. If unemployment can maintain at this level, if we go to a 3-year level, you can see that unemployment has actually come down quite a bit, you know. So, and this is a 5-year chart. You can see unemployment levels, you know, are at a, I would say, one of its slightly better numbers comparatively in the last 5 years and even in the last 10 years. So I do think there is potential for the euro sector to kind of increase in currency value in the next at least couple of weeks going into the year of 2025. So I am kind of waiting for that to happen. So this is why I picked the euro kiwi. The euro seems to be on the road to some kind of a stable upward move, you know. So I do want to see whether or not that kind of holds. So if unemployment rate doesn't increase, if inflation remains stable, if interest rates kind of remains here and they don't decrease it anymore, you can see they have been aggressively, I won't say aggressively, but they have been pushing interest rates down in the last couple of months. If they don't push interest rates down, then I think there's a higher probability it's going to go up in terms of the currency pair. But if they continue trying to push interest rates towards the downside, then I think the euro is probably going to range bound for quite a bit more time. So I'm also interested to see what the euro, the ECB has to do, you know, come in the next couple of weeks. Now, next week, it's the first Friday of the month. We are coming into non-farm payrolls and unemployment figures. So definitely very interested to figure out, to see what is this US dollar numbers over here. If the unemployment rate goes above the 4.2% by at least 0.2 to 0.3 points, then I think the USD will collapse further in the short run. All right, so I am interested in this figure to see whether or not there is a confirmation of the slowdown of the economy. But I do suspect that towards the end of the year, sentiment is usually good. I suspect that coming towards the end of the year, we might see a range-bound USD pushing towards the upside, you know, and in the end, it's going to be flat, because if sentiment is good, but seasonals are down, you know, given that low volume is happening in December, I think the USD is just going to flatline and just trade in a range for a little while. So trading in the month of December, always, you know, it's really not for trend trading. It's a lot more range trading. So please be really, really careful, because even if there's a direction on fundamentals, there's not that much activity, volatility and volume that's going to be in the market as, you know, people start to go off for their trading for the holidays. And I think, if I'm not wrong, Actions to Wealth will also go on holiday from December 19th. I'm pretty sure you'll be receiving the notification in your Telegram chats pretty soon as well. All right. Now, for those of you who are subscribed to my Sunday show tonight, I will probably talk a little bit more about the currency pairs that I am going to be looking at for the month of December. In the meantime, that's all I have for today. Just to recap, the currency pair that I'm slightly bullish on, still the USD, but not now. The euro, slightly earlier than the USD, but we want to wait for those signals. And I'm pairing it against the Kiwi, because across the board, Kiwi still looks like it's going to be the weakest of the bunch. And also not forgetting the yen, the Japanese yen. I don't really have that much time to talk about the Japanese yen, but it really looks like the Japanese yen is going to find a little bit more strength coming into the end of the year, into 2025. So I'll talk more about it in tonight's Sunday show. So with that, thank you for joining me this week. Unfortunately, Lloyd is not available, and I'll see you guys when I see you guys. Bye, guys.